Hey there, taxpayers! Are you ready to save some serious bucks on your taxes? Today, I'm going to walk you through the essentials of claiming House Rent Allowance or HRA Exemption. Let's dive right in. First things first, eligibility. If you're a salaried individual living in rented accommodation and receiving HRA as part of your salary, you're eligible. But remember, you can't claim HRA if you live in your own house. Now, on to the calculations. The amount of HRA exemption you can claim is the minimum of these three. 1. Actual HRA received from your employer. 2. 50% of your basic salary if you live in a metro city or 40% for non-metro. And 3. The actual rent paid minus 10% of your basic salary. Sounds a bit tricky, right? But don't worry, you can always use online HRA calculators to make it easier. Next up, documentation. Here's what you need to claim HRA exemption. Firstly, your rent receipts. Ensure they have details like your landlord's name, address, and PAN number if the annual rent exceeds rupees 1 lakh. Secondly, your rental agreement. This acts as proof of your tenancy. And finally, your employer's declaration form, which you can usually get from your HR department. Pro tip: if you're paying rent to your parents, you can still claim HRA as long as you have a valid rental agreement and receipts. Just make sure your parents declare this rental income in their tax returns. Alright, so that's the lowdown on claiming HRA exemption. It's one of the best ways to save on taxes while enjoying your rented space. Don't forget to keep all your documents in order and file your claim correctly. Thanks for tuning in. Stay smart and save more. File your income tax return hassle-free with FYITR and subscribe to our channel starting from Rs 499.